your estate to real estate. It's Money Matters with Dino.
What happens on the investment side? How are deductions different for rental properties?
The deductions, a lot of them are the same as opposed to commercial properties.
No, just as opposed to a second home or a primary.
Well, for one thing, there's a lot more of them. When you have an investment property or a rental property, you can take about 8 or 9 deductions as opposed to 1 or 2 if you have residential mortgage. So, for example, the biggest one would be interest, and that's the same as being a homeowner. Your mortgage interest is going to be one of your biggest deductions on the loan that you bought the property with. But another very important one is depreciation. And, basically, fortunately for the owner, the IRS assumes that the business asset, which is your property, is much like a piece of office equipment. So it's got kind of a finite life. And so they assume that, because it's going to be slowly kind of wasting away and eventually turning into a broken copy machine, that you can write that loss off over a period of time. So the way they see it, your income producing property that's gaining in value each month, they see it as a negative. In fact, what you're doing is you're repairing and you're renovating and you're improving that property typically every few months. And so it's actually gaining in value. But it's just kind of a neat quirk of the tax law that looks at it as something that is kind of turning to dust.